We start off with the latest record close for Apple. Shares of the iPhone maker now up more than 10% in just the last month and a whopping 51% from April lows. The stock closing today with a market cap just a stone's throw away from $4 trillion. That is more than the entire GDP of the United Kingdom. This year's rally coming even as the tech giant's efforts in the AI space fail to impress, users poking fun at Apple Intelligence's awkward chat summaries, faulty image editing, and sometimes bizarre Genmoji capabilities, like making poop hair on a face. Yes. Stan will tell you all about it. Yeah. Apple also saw iPhone sales in China fall for the third quarter and is struggling in its partnership with Baidu to bring AI to its devices there. So with this rally going strong in spite of these concerns, has Apple become the ultimate defensive play? Does this just tell us the tale of the market where momentum is the word of the day, guys?
I think you hit the nail on the head. And, you try to figure out why this is happening. I don't think it's happening for any fundamental reasons. Obviously, the market's been doing fine, so you try to figure out what's going on below the surface. A couple things, I think. Semis have actually now underperformed since July-ish, if you look at the chart. Qualcomm, Micron, Texan, names that we talk about all the time, really actually have traded poorly. AMD throw it in the mix. So I think in some ways there's been a rotation out of semis. And the other is Apple's in 400 ETFs, of which it's one of the top 15 holdings. So as money flow goes, Apple wins regardless of what they're saying. It's just a money flow thing as well. So I get it, but with each passing day, it's getting more expensive, not cheaper.
Yeah, and, it's interesting. So we used to talk about the cash. We used to talk about their buyback. Yep. We used to talk about their dividend. They're like rounding errors right now. If you look at their cash position, it's like 4% of the market cap net of their debt. It's like minuscule, right? And then their buybacks, remember that day earlier this year, they announced a $110 billion buyback? Actually, the stock rallied. And, think about that. It actually has no impact anymore. So you look at a stock right there, that whole part was really from 2012 when they announced that buyback till I want to say about 5 years ago. That was a really important part of the story. You started off saying defensive. Well, here's the problem. 50% of their sales now come from iPhones. They're not growing. And this services thing, the AI, this is the next leg of growth. This is the thing that would justify the multiple where it's trading at. It's just there's no there. So I've never been so right about one thing and so wrong about the other. The right thing was June 10th when they had their WWDC. Mm-hmm. It looked very obvious to me what was going on there. It was a fugazi. And everything since then has been a joke, except the stock has rallied 30% since June 10th. That's the wrong part right there. So, sometimes both things can be true.
Both things can be true. I think, the buyback thing, what used to be super accretive when they traded a very different multiple is actually not accretive now. But it's interesting. I own a little, and I've been sort of surprised with how strong it is. I don't really get this. Well, it was only up a little bit today, but this valuation here, it's not super crazy. But if we always talk about looking at the hardware and the software part, which we know the multiple. The contribution of each is changing towards services, which is much more profitable and recurring. But you'd think the China issues would really affect them a lot. On the other hand, though, Tim Cook has been very adept at,
cozying up to Xi Jinping.
Yes. That would be one way to say it. And, I think that would be right. And it's worked for him. But I think I don't know. It's just sort of in the melt up. There are other things I like much better, like a Meta, just valuation wise. I'd much rather be there.
That's what's interesting is that, with the Meta story, it really sort of underscores this notion that AI the effects can be seen, right? In real, we can 100%. Actually see them right now. Right. The impact on its business, the impact on what it sells, its ads, et cetera. And yet with Apple, we don't have that impact. And yet it did levitate from that June date of the WWDC on the AI hopes. And here we are. What are they? It's Genmojis. It's summarizing notes. It's image generation.
Well, Gene Munster comes on and talks about that and the hope. And listen, Gene's going to wind up being right. By the way, he came on that same day, June 10th, and said it was, I don't want to put words in his mouth, but transformational, one of the biggest events in the history of the company. So good for Gene in terms of the stock. He got it right. But you're right. In terms of AI, and we've talked about it on this show, there are two companies that are clearly winning in the AI world in terms of making and monetizing, and it's Walmart, and you see it in their earnings releases the last two times, and it's Facebook over their last two earnings releases, and they're being rewarded for it in terms of the stock price and the valuation. Apple's being rewarded for something they're not monetizing yet, and quite frankly, might have trouble doing over the next year and a half.